Hi, welcome to another Learn, Grow, Invest meeting. I'm Jermaine, one of the co-founders of this community. So today we're going to do the first earnings report review for Q1 for 2020. So we did something similar last year, and what this session is really about is just going through some of the earnings reports that have come out. This is not quite like our stocks to watch that you're used to. So we're not going to be sharing our picks. We're just going to be going through as many of the earning reports as we can, just at least the ones that we think are interesting to note. So I'm joined by my friend David Rose. So he's going to be leading the session. So let's just get started. So if it's your first time here, again, I'm Jermaine. Welcome. We're a Bible-based investment community that's focused on financial literacy and education. So the reason why we do this session is kind of go through, the earnings reports because, a lot of times there's movement in the market and persons aren't really sure why. Now, these reports that we're going to look at are one of the main things that may drive prices up or down depending on the performance of the company. Now, there are other things at play, of course, but earnings is definitely one of those things that has a major role to play in that performance of stocks on the market. So I'm just going to give David a minute or two to be ready, and then we'll get started. So David, just, let me know when we're good to go. But in the meantime, I'll ask you guys, we did our stock review, IPO review on JFP on Friday. Did you check that out? How did you like it? Did you make a decision either way about the company? Let me know in the comments below. I'm interested to know what you decided to do. So we did a poll in our Telegram group asking persons if they're going to take advantage of it. And the responses were quite interesting. So I'm curious to know what you guys think as well. So, David, let me know when you're all set. All right, I'm gonna bring you on stream now, David. Hey, man. I think everybody's waiting to see you.
Yeah, probably Kimara as well.
Yeah. All right. Donovan, the link is in the description to join the Telegram group. So just check in the description of this video. You'll see the link closer to the bottom and you'll be able to join us there. All right. So David, which company you want us to start with?
We're going to go through JMMB Group and Proven next.
Okay.
So I'm waiting to know if you can see my screen.
Yeah, just be sure to zoom in. Yeah.
And another report comes off of JFP. Not pretty.
David, you couldn't save that for later, man. Save that for later.
No, man, no, but people are asking about it.
Let's bring that up first. Let's look at that first.
It's in WhatsApp, so but it's from Sagicor Investments and they're like underweight, and that's the third broker report other than the lead broker or selling agents saying, hey, sell or don't participate, not sell but don't participate or underweight.
Mm-hmm. Okay. You know what? Save that. Let's save that to the end.
Yeah.
All right. So let's start with JMMB.
Yeah. So all right. So as you can see on my screen, JMMB Group is making bank, quote unquote bank, although they have a banking arm under them as well. But JMMB has done pretty substantially well considering all that's going on and the fact that they wouldn't have had Sagicor Financial Company's fourth quarter in their most recent report, which is this one. So for those who don't know, JMMB Group has a March 31 financial year, which means that this is their third quarter and their 9 months report. And because of that, the company's audited financials won't be available until end of May, around May 30. So for those wondering what I'm talking about, a company can report its earnings, audited financials within 60 days, or give an audited 45, and then they're audited in 90 overall. So JMB chooses to do the former, which is 60 days. 60 days from March 31 is May 30. I'm providing all this context. So in terms like when JMB coming out, at least have a notice
You,
of to when it
you
should come
mean
out.
you mean specifically K, right? You're answering just for K, right? Because she's always the one
Yes.
asking. Yeah, yeah.
Yeah,
Gotcha.
but it's also information for everybody else, because earlier in the group I was saying to persons that next week is going to be fun, because that is when you're going to see all the other earnings coming up for most companies,
Yeah,
because
yeah,
that is when all of the companies were elected to do 60 days for their audited. In this case, for the companies who report within 60 days, we're releasing their financials. So, some of the companies that you probably might be seeing is Carib Cement Limited, Caribbean Flavors and Fragrances Limited, German Trading Limited, Fast Company Limited, Dolphin Cove, Grace Kennedy, Caribbean Insurance Brokers, Chicken Corporation Limited, Jamaica Producers, Jamaica Stock Exchange Limited, Kingston Wars, Kingston Properties, Amy Remittance Limited, Panjam, Sagicor Group Jamaica, the Sagicor Select Funds, Sagicor Real Estate X Fund, and I give all this background information at the start. So
yeah,
persons are at least when they open the video, they're going to be like, all right, oh, results are in here. All right, just get this back
yeah,
information early before we get into the actual meat. But let's just keep down to the financials so you guys can see what's up. So as you can see right here, JMB did 108% year over year in net profit attributable to shareholders. So 3.15 billion relative to $1.51 billion. And as I mentioned right here, during this period, they wouldn't have had Hedgecoe Financial Company's results, the share of a profit or loss, because Hedgecoe SFC actually has their audited results done within 90 days. So they will come up in the JMMB's audited results, which will include both statutory financial companies' fourth quarter and first quarter results. So that's something to stay tuned for at the end of May. But as
yeah,
you can see right here, JMMB Group Limited's net interest income really, you know, increased pretty substantially. Although interest expense kind of ticked up significantly, the growth interest income was pretty commendable considering the environment we're in, which is a rising interest rate environment driven mainly by the quote unquote risk of inflation and capital flight. So although net interest income went up by a marginal amount, about $500 million, the largest driver of the gains for JMB Group Limited for the most recent quarter was their gain on securities trading. So you can check the audited notes. What securities trading means, basically trading in financial securities like bonds, stocks, and so on. The team would have probably positioned themselves pretty well, because to do almost 80% more in a year in securities year over year in securities trading, it'd be
yeah,
substantial. And you can see the foreign exchange margin gains are pretty good as well. So it has almost, I think this is what, almost 50% growth in operating revenue for the period, which was pretty much, which was a lot faster than the company's operating expenses.
David, they're asking to zoom in a little bit more.
Oh, sure.
Yeah,
This is better.
yeah, man, that should be.
All right. So what I was pointing out was that although the expense line almost went up by $1 billion, the revenue growth was much faster than that expense area. And because companies' uh, loan books or even their financial assets would have performed better in the current time, the impairment provision wasn't as significant, which is why you see such almost a 50% reduction. And for those who know what this section is, under IFRS 9, you have to make a provision for the risk of a party not being able to repay a financial obligation. In this case, it can be a loan, it can be, some sort of arrangement, but you have to put a provision in place just in case it's not repaid. So once a loan is repaid or that financial obligation is repaid back to JMMB, they credit it back to the income statement. So the thing is, if JMB's loan book quality improves or the loans that were put on moratorium are being repaid on schedule again, in essence, you see a reduction in the impairment provision on financial assets. So that kind of gives some context to persons, so they're at least aware of what happens when you see an impairment loss line for financial companies. And another term you might see is credit loss provisions. That's another term you might see as well. So as you can see right here, taxes went almost doubled across the group, but end of the day, they did a significant amount in terms of profit, consolidated net profit, and even net profit attributable to shareholders. And also this growth in non-controlling interest is attributable to their Dominican Republic operations. So for those who don't know, JMMB Group Limited does not have a wholly owned controlled interest in their Dominican Republic operations. They only have full ownership in their Jamaican assets and their Trinidad and Tobago assets. So when you see this large increase in non-controlling interest, it's in the Dominican Republic. And when we go across, as we can see, JMMB did $21.98 billion in net operating revenue, where it's $16.54 billion in the same period in the prior year.
That's impressive, man.
And when you account for higher expenses, almost $3 billion more, you're seeing a significant, improvement in overall earnings. And right here in the share profit line, you're seeing a share of profit and not a share of loss. And this is because at the same time last year, when this was being reported, Sajika Financial Company still had Playa on their books to a point. And they had other transactions which actually dragged down their earnings in the period. So for those wondering, last January, Sagicor Jamaica, through Expo, sold their plastic. And then in Q2, there's a reinsurance transaction that occurred for SFC, which resulted in a net loss in that period as well. So, this is why you're seeing these this loss in that period. But in this case, for this year, they are massive profit. And the funny thing about it is, JMB is recording more of SFC's earnings because of SFC's share buyback. What is a share buyback? A share buyback is basically where a company repurchases shares, meaning the listed shares on the open market, and who has my treasury shares to either be cancelled or to be issued as compensation to staff. So in case of Sagicor Financial Company, over the last 2 years since they listed in the Toronto Stock Exchange, they've actually been having an ongoing share buyback program, and they've been actively buying back their shares. So when JMB acquired SFC, they own 22.5%. Up to, call it December, they own 23.22% of SFC now. JMB has not spent a single dime more to buy SFC share. And this matters because JMB Group Limited has actually announced that they're going to start their share buyback program as of April 1, which is their new financial year. They haven't said there's going to be both Jamaica and Trinidad, or just Jamaica, but they've allocated $300 million worth of cash to do the share buyback. And what this will do is that, for one, it will reduce the number of shares outstanding for JMMB Group Limited, which means that your relative interest in JMMB will increase. Two,
Hold on, pause there, David. I want some persons to understand that. So I'm glad you raised it. So we may need to, how many shares are outstanding now? And if so when they buy.
All right, I get what you're asking. You want me to show an example, and
yes,
I'll show an example for JMMB Group Limited basically. But what I was also pointing out was that in the case of SFC, that's a perfect example of JMMB's relative interest or ownership going up just because of the share buyback. So JMMB owned 22.5% when they acquired in December 2019, and over the last 2 years, there's taken an increase on that amount, 22.5 to 23.22%. It's because of SFC share buyback program. So page 7, let's go to page 15. So JMMB has 1.9 billion shares in circulation. Yeah, right here. So I can't expand this any further, but let us do 300 million at an average price of $50.
Oh, 50 works.
Yeah, because remember the share price is not as yet, and the JMB share price increases to $50.
Yeah.
So this is me being relatively conservative. So 6 million shares, 6 million shares less, right?
Yeah, that's not really that doesn't do anything.
No, it's not. And I might make a share buyback and
Yeah.
consider JMMB, but I just see something.
That barely put so my ownership, if I'm a shareholder, goes up by 0.001%. I don't know.
As I said, the buyback is just a mechanism. It's not something to.
Yeah, yeah. I
But
mean,
in
I
the
just
beginning,
so I asked you to do that. So I mean, I worked. I thought about it before. I just want persons to, because I know how persons respond to things called buybacks and splits, and it sounds all relatively
attractive.
nice and good. So I just want persons to understand what it really means, what it really looks like. No,
All right. So in
yeah,
that example, I reduced JMB share capital by 6 million shares. So the earnings per share, because someone actually made this error when they contacted me recently, was asking how JMB's EPS wasn't higher. Because what they're doing, they're using the for the period and the net profit attributable to JMMB owners. So if a person's wondering, when you're calculating earnings per share, you always use net profit attributable to shareholders, equity holders, whatever term, but the owners, and you would not use the NCI, non-controlling interest. So when you divide 3.15 billion divided by the 1.96 billion shares, you get $1.61 in an EPS, earnings per share.
mm-hmm.
In the latest JMB buys back, as I alluded to, of 6 million shares, right? Their EPS would move in this case from a 2 decimal point standpoint.
Okay, I see that.
Yeah, but and so I said that I would just explain it and highlighting it because it remember something significant at the moment. But the thing is, I'm going to mention, when I go down further and explain it, I'll highlight it. But for context, in the buyback scenario, what happens is that you also reduce the supply on the market. So that's one thing that will actually make quote unquote retail investors happier
Yeah,
because
so yeah, that would definitely be good to know, because at the same time, I mean, if it is that you can take up some of that volume, then maybe that would be attractive for those holding, right? Again, so
exactly. So what I was going to point out was that also JMB is owned by what it called institutional investors. So a share buyback, upon increasing their relative ownership, it creates a little more scarcity in the company because there are fewer shares available. And then on top of that, for companies like Proven Investments Limited, which owns 20.01% of JMMB, their ownership would increase at the same time because of that buyback.
yeah.
So Proven shareholders will be happier. We're very happy to have JMB share buyback because it increases Proven's relative ownership in JMB Group Limited, which in turn means a greater share profit for Proven Investments Limited's share profit line on their income statement.
Yeah, man. I
And then we
know.
want
I know everybody is looking forward to it. Everybody is hoping that it has the intended effect. So let's see how it goes.
I,
So
I was I was trying to finish up a point, but you wanted me
yeah,
to go through the
finish it,
buyback.
finish it. Go ahead, finish it.
So JMB has earned $8.82 billion in consolidated net profit, but they've earned $8.28 billion in net profit attributable to shareholders over the period, over the 9 months. So for context, JMB has surpassed their entire 2021 financial year, meaning from April 2020 to March 2021 financial year in just 9 months. And that's pretty commendable, you know?
Yeah,
So,
definitely.
so what does this mean? What this means is that with 1 quarter remaining, JMB is going to set a new profit record. And they're basically hitting their profit targets a lot earlier than expected. Because JMB said that, hey, we're expecting to hit our profit target by 2023 or 2024. They've hit it a lot earlier than they'd have projected. So I'm just looking through right here for JMMB Group Limited's C tier. So JMMB Group Limited earned $7.51 billion in net profit profit attributable to shareholders for the entire 2021 period. And they've earned almost $700 million more in net profit attributable to shareholders in less time. So with SFC's Q4 and Q1 to be added in the audited financials, JMMB Group Limited's net profit might easily surpass $10-11 billion. And the reason why I say that, and it's not advice or speculation, but just based on what I understand. For one, the actual reserve release or strengthening occurs mainly in Q3/Q4 for SFC, such a financial company. So you probably see a higher profit in that period for one. And on top of that, if DJMB was to do even half of what, not even half, call it half of what you see right here, or even the same amount in share profit in their when added to their audited financials, they would just pass $10 billion. And this is including JMB's own organic growth, because if they did $3.34 billion in net profit in just in this one quarter, if they repeat even $2 billion, you see what I'm showing you?
Yeah, man.
So that's just to show you that JMMB Group Limited is going to have a really superb end of financial year, and I wish the owners who are willing to stay around all the best. And for those wondering what's going on right here, so the change in the investment valuation for the instruments in their other comprehensive income drag down the total comprehensive loss for the period, total comprehensive loss for the period. So one thing is that JMB surpassed $600 billion worth of assets, which is just slightly higher than NCB's entire NCBJ, the bank, the local bank in Jamaica, entire deposit base. So kudos to the JMB team. $72.41 billion worth of cash. Have a pretty substantial loan book and investment book as well. And for those who didn't know, Surgical Fashion Company's dividends so far for up to the 9-month period has given JMB about $800 million worth of cash into their own books. So that's pretty substantial. And JMB's PE is still heavily undervalued.
Notoriously so. Notoriously so.
So they did $70.54 billion in operating cash improvement operating activities in the 9 months. Invested a lot of it. Paid us some record dividends, and the rest of the cash goes up.
Yeah, yeah.
But let's go down to the right here. This is what I was speaking about, people. As you can see right here, JMMB doesn't have full ownership in these different Dominican Republic subsidiaries, which is why you saw that NCI amount. And as you can see SFC's contribution right here in terms of their JMB's ownership in SFC, and you can see it right here, it increased because of the buyback program. And this is why I said that share buyback would benefit a company like Proven, because their relative ownership would go up. So let's just look again at that scenario.
So what you're showing here, based on the 1.9 billion outstanding, 1 billion is with the top 10.
Yeah. So in that scenario, Proven's ownership goes from 20.0 to 20.07%, which isn't significant, but hey, that's more to Proven's books if JMB earns her money. So as I was saying, that JMB has a significant institutional ownership, which is why, for them to have a lower share amount of shares outstanding benefits them from an ownership perspective, but creating more scarcity for persons who want to buy substantial ownership amount.
I personally wished to have seen them buy back more. So if they said, for example, because look at the amount of cash that they have. So if
no,
they
but
said,
the thing is, things that JMB is in a growth path right now. So if you notice, the expenses went up significantly for the period, and look into the 2 acquisitions that they said they should have been closed by the end of this financial year. So
yeah, man, I remember those. I'm waiting for those.
No, but the thing is, as I remember, Jermaine, that $300 of cash that a big amount you're talking about in terms of a buyback. You have to remember that JMB is going to be paying a lot more in interest expense now relative to its variable preference shares as the BOJ increases interest rates.
Okay, yeah.
So that's something you have to remember because, as I said, I did my article back in December. Based on my estimation of between 4 to 5% variable rate, BOJ weighted average treasury bill yield at the time, JMB will be paying about $300 million extra in upcoming financial year and just interest. So, as I said, can't really complain to the company as a JMB should do this or that.
I
It was
mean,
a big
listen, I think a lot of persons are happy to see it, and I trust that they understand what they're doing. Because the truth is, if the path that they're on, they have proven to be successful over and over and over again, they remain undervalued. If you think it's a good company, you have no excuse. A lot of people want to wait until it is moving before they buy. Do that at your own risk. So that's all we said there.
And this Jamaica Market Brokers Limited, which is their main earning subsidiary. So you realize that from this consolidated subsidiary that you realize their net operating revenue was slightly down. And this is where you saw the bulk of the increase in expenses for the quarter and even for the overall 9-month period.
Okay.
And for those wondering why the profit has gone down, the CFO explained at the first quarter briefing in the sense that because they removed their ownership SFC from JMMB Limited, a subsidiary of JMMB Limited, that's why you see lower earnings on this side, but it's still the group still has the same accrual earnings when you look at the overall group itself. So for the subsidiary, that's why you see the profit going down relatively in this period.
Okay.
And that $290 million worth of assets and JMMB Limited, Jamaica Market Brokers Limited, includes these subsidiaries. So JMB Securities Limited, JMB Insurance Brokers Limited, JMB Real Estate Holdings Limited, Capital and Credit Securities, and JMB Fund Managers. JMB Bank Limited is held under the group. And as you can see, JMB has had a pretty interesting last couple of days after its earnings.
Yeah.
Peaked a little about to 44.09, but let's see. It's was 52-week high recently, so can't complain.
So hold on, imagine that 50 so scroll back down because it's in the last 52 weeks it was at $29.
Mm-hmm.
Interesting. So I
And
mean,
it was between $29 to $35, $29 to $32
yes, I
between
remember.
for most of the first half of 2021. So
Yeah.
up 8% year to date. So look up to the owners. So the next company we're going to look at is Proven Investments Limited. I'm going to get into the financials so you can see what's going on. So as you can see,
one more zoom, one more. That's yeah, perfect.
as you can see right here, for the quarter, Proven did a lot more in net revenue compared to the prior period, and this is really because of their consolidation of Lascow Manufacturing Limited. So for those wondering what that is, Proven acquired a 50.5% stake in Lascow Manufacturing Limited back in June 2021. So that new subsidiary is contributing to the company's financial statements, in this case, income statement. And for those who are interested in Proven, they're having their first investor briefing coming this Thursday at 6:30 p.m. Check out Proven's Instagram page to find that out. And that wasn't a free advertisement, that's just me telling you the facts. So as you can see in the other income segment, they didn't have the repeat of securities gains that did in the prior period. And even NCB said the same thing in the sense that they had, garnered some significant gains on securities trading in the prior period, which is December 2020, that quarter, because they bought so many undervalued assets, and gains in that time. But in the case of Proven, their subsidiary Boston and Improving Wealth Limited, didn't have that repeat performance in the most recent quarter. However, dividend income has increased again because what? The different entities or holdings they have on their books are paying dividends out again. And this does not include JMB Limited right here. JMB Group Limited, and for those asking why, under the equity method of IFRS, I can't remember the number, if you have a share profit on your income statement, you cannot have the dividend income being represented, dividends from the associate being represented on the same income statement. It's getting as cash, but at the same time, on the income statement, you don't actually see come up on income statement because you realize their dividend income went up significantly over the 9-month period as well. Pension management income went up pretty well because pension assets have gone up in value and probably already increased in the pension funds that you manage as well. So that's really how pension fund managers make their money in the sense that they manage more assets increase in value, they get more management fees.
Yeah.
Fees and commission income went up slightly, but it's really the inclusion of robbers which drove up the net revenue line. And the other income line went up pretty substantially. I'm not sure why, but yeah.
It doesn't say it in the notes? The
No,
other
it wouldn't. They don't attack a company notes on that.
Okay.
And as you can see, depreciation charges went up significantly since the intangible assets would have been attributable to probably Robert Manufacturing
Yeah.
and
Yeah.
further subsidiaries. The IFRS 9 provisioning, it wasn't an expense in this period. So for those wondering what I'm talking about, in the case of expenses, in CCI bracket right here, this means a reversal. So in this case, for the quarter, that a reversal of $33,858 US. But for the overall 9-month period, they had an expense on the line item. Overall expenses, quote unquote, doubled in the quarter, and that's because of the increase in Roberts Manufacturing, along with even Heritage Funds. So remember, they acquired Heritage Education and Funds International Limited in October, and acquired Roberts. So expenses that have gone up, apart from their own core subsidiaries increasing expenses at the same time. Operating profit was pretty substantial compared to the prior period. And for the share results of associates, most of this was attributable to JMMB Group Limited. The Proven has two associates at the moment, JMMB Group Limited and Access Financial Services Limited, two listed companies on the JSE. Access Financial Services Limited is a very small portion of the overall group's share of profit from their associates. Remember, they sold their Dream Stake back in July last year.
Yeah.
So, that's you want to see the contribution from Dream in this quarter. And after you factor in income taxes and the non-controlling interest, which is increased because of their ownership now in Roberts, you have this significant increase in profit of $4.1 billion, $4.1 million US compared to $1.51 million US. I have to remember that's US dollars I'm looking at, not JMD. And you have to also understand that in this case, this period right here is included which is December 2021, will include the extra 100 million shares done to the company's APO. By this period, they've had fewer shares being used for the EPS calculation. So I hope you guys took note of that at the same time, everybody. So for this period, you have more shares being used for the calculation. And for this period, it was actually lower. So for the overall 9 months, you have $1.33 in earnings per share, but in this case, $10.08 million US in net profit attributable to the shareholders, relative to $6.31 million. And they had $11.53 million in normalized net profit for the 2021 financial year. The reason why I use the word normalized in context is because in the March 2020 financial year, Proven had sold almost half of their stake in Access Financial Services Limited, 25%, and recorded a gain on that disposal. So in that period, they had more than, I think, more than $30 million US in net profit attributable to shareholders. But when you normalize it, it's actually not the highest earning period for the company at the moment. So last year had been the highest normalized period of $11.53 million US. But based on the company's current 9 months performance, along with the fact that they just acquired Fidelity Bank Limited, which will now be renamed Proven Bank Limited on February 1, that should contribute to the company's income statement line when the audit comes out in end of May. JMMB Group Limited has not accounted for SFC's Q4, Q1 as yet. So when we do see those results come out in end of May, early June, you're going to probably see, as I said, Proven's highest ever net profit in their history, in their, call it 10, 11-year history.
Nice.
And let me just, oh yes, I forgot to mention. So in the period, Proven's total assets increased to 754 million US dollars, which is about 111 billion Jamaican dollars in total assets. So, additional context, Proven had acquired Fidelity Bank Limited on February 1, and their total assets was about 350 million US dollars. So when you do see Proven Investments Limited's audited financials come out in May/June, you're going to see more than 1 billion US dollars in total assets, which is pretty interesting because when people started in December, when people actually raised their capital, like in February 2010, they raised $20 million US in a private placement from 150 investors. And for them to have grown over that time with new investors to rights issues and even an APO to $1 billion US in assets, it's pretty historic for them, you know? So that just shows that if you have a dream and people are willing to follow you, anything is possible. Because to go from $20 million in quote-unquote capital to $1 billion in total assets over call it 11 years is no understatement. And for those wondering, Proven's book value is about 0.2163. So company is still trading a little bit close to book on the US dollar side of the market. I'm talking to the GMD side, but that's just for those who are wondering what's going on. So let's scroll down. And for those who didn't know, Proven actually declared a dividend of 0.0041 cents, which is their highest ever declared dividend in their history. And in GMD terms, that comes up to 0.644. Well, 0.6444. It actually sells on the JSC website. So for those who are wondering, if tomorrow is the last day for you to buy Proven to qualify for this dividend, the reason why I'm explaining this is because the record is February 24. We operate on something called the T+2 system, trade day plus 2 days. If you buy on tomorrow, which is February 22, and February 24 comes, at the end of trading, you'll be on record to qualify for this dividend. It should be paid on March 9, which is about 2 weeks away.
Yeah. If you want to know how dividends work, we did a full video on it. So just check that out on our channel as well.
So I'd explain it to points a persons are a little bit aware of, the dividend, because the person going to be like, wait, about on the 23rd, I should get the dividend, but no, that's how it works.
Yep, exactly.
And to highlight right here, Proven indicates that, their off-balance sheet assets under management is $820 million US dollars, which isn't bad, as an asset manager, that's a pretty good thing.
Yeah.
And as you go down right here, they highlight to you that, Proven Wealth Limited's net profit came down slightly. Then you have Baslil, lower net profit, 2.5 million to 5.92, reduced securities gain trading. And they highlighted specifically right here that, they are implementing strategies to make their portfolio resilient against interest rate shocks. So this is something to take note of. So Proven already owns one bank in St. Lucia called Basilil, and Proven Bank Limited in Cayman with their second bank, but Basilil already says, hey, we're taking the measures needed to guard against interest rate shocks as interest rates go up. And they tell you that, IFP still is back where it should be as yet, but at a loss relative to our profit. And that is just because the company, is suffering from the current restrictions in Cayman at the time. So for those who didn't know, Cayman actually was closed most of last quarter, which would have been between October and December. Nobody could really come in or go out. So that is why, you saw that dip in earnings for the company. Pretty much is that Heritage gave them $90,000 US worth of net profit. Mentioned Fidelity Bank right here. And they say that, their Caesar and Via developments are supposed to be completed in this quarter. And they changed the name of the company from Real Properties Limited to Proven Properties Limited as part of their rebranding strategy. So as you can see, the Caesar, Via Braemar, two high net worth areas, Kingston 5.
Yeah.
This is their joint venture with David Stevens in Cayman. It says shoots by July. Vista at Bloomfield by end of year. I passed by this development back in December. It was far from what I expected it to be its progression wise, but yeah, they said by December it should be finished. They said by December as well for this property here on Grove Park Avenue. And where's Gladstone? Probably should have seen it a while. I think it's a while ago, but see there, Gladstone Commercial. This is the property. They said you're going to be a new HQ right near. Look at again, near Ragamuffin Cafe, and right near where CPJ's retail market is. So it's supposed to be completed very soon. So and the other properties that they have. They just right property on Chelsea Avenue for parking back in last quarter. But there's that's proper subsidy right there. And they speak about how much Access contributed, almost double, how much JMMB contributed, how much Roberts contributed, and so on and so forth. So we wanted to give you some little insight into what's happened for the company during the period. As you can see, stock didn't really react any significant ways. Went up the day after the results came out and 20 to 24 cents, and it's been swinging up and down. I don't mind. But as you can see,
I'm sure you don't. So David, I shared on a previous video one of the reviews we did last year about how we trades proven. So be sure to check that out.
Yeah, but the similarity is that proven has predictable trends that you can exploit. And I remember getting them proven last other day at 0.2103. I can sell it back at 0.23, 0.24, I make a 10-15% profit in US dollar terms, collect a dividend, buy back cheap again, expand my holdings. And that's just swing trading in a sense, because sometimes I don't need to actually be holding the stock for more than a week or two at most. I'm kind of the same day.
So all the beginners watching, David, don't worry about what swing trading is. We'll get to it at some point. All right.
One warning to you guys is know what when you see a preference share in the market, know what the par value is before you're buying. I did not mind collecting 15% today of US dollar preference share in the market. So thank you very much to the persons who were buying. I didn't mind collecting 15% in US dollar terms in that month. And they bought below par. So for me, I'm happy. So next company I'm going to review is FESCO Limited.
Let's go.
Future Energy Source Company Limited. Everybody's the favorite company right now. Because according to the managing director.
That's Pertree.
Because according to the managing director, he didn't expect to see so many persons coming to the beach with having location saying, hey, we want to, we want actually our shareholder, we're about FESCO.
Yeah.
And that's something you have to remember, in the sense that if you own a company and you buy its products, it benefits the company, it benefits you as a shareholder. So Hope you guys understand and appreciate that, So let us continue basically. So as you can see in this picture right here, this is the Beachwood Avenue location. And for those who don't know, this is FESCO's only owned and company operated location. Why do I have to put context in this case? In the way FESCO operates, or before Beachwood opened, was that they were a marketing company. So what that meant was that they bought fuel temperature jam and they sell it to the dealers at a markup.
Yeah.
Although the other stations have the FESCO brand around it, FESCO only makes money from selling the gas directly to those dealers. So that kind of gives context to everybody in essence.
Yeah, we covered that in the stock review for FESCO. We went through the different types of dealerships that they have. So that's some good information. It was in their prospectus.
So I'm not sure if FESCO didn't include the actual volume sold for the period. I'm not sure why, but we continue. So FESCO highlighted, and they highlighted somewhere earlier in the notes that they don't control the price of the fuel. They focus on the quantity or the volume sold and the gross profits. So if FESCO had included the actual amount of volume of fuel sold for the quarter, we could have said, all right, it's really because of the increase in fuel prices why the revenue was so high, but they didn't include it, so we can't speculate. But as you can see, for the third quarter, their revenue went by 139%. If I had the actual volume, we could know if FESCO sold more gas or if it was just, solely the function of higher prices. But as you can see, persons who have been checking their gas pump or even checking their fuel expense, gas has increased by almost 50% over the last year when you check out Petrojam's markup rate. As you can see with FESCO, went by 144%. And the reason why you'd have seen increase in operating profit and administrative expenses during the period would have been because of their new Beachwood location. So, because they opened Beachwood location in November 2021, that's what has to incur expenses to the company's overall expense line. And finance income was relatively down, but that doesn't matter significantly. And because FESCO doesn't have to pay taxes for the next 5 years, income taxes specifically,
Yeah.
that's why you don't see the taxation line right here, which is why you saw profit go by 250% for the overall third quarter period, and for the 9 months it's by 141%. And this is what they're projected to do, $263 million.
I
Right,
like
it's in
that.
2020 already, 2021.
I like the fact that they included projections. I think every company should do that.
Agreed. So as I pointed, actually at the Mayweather forum last week, the managing director said that hey, they're on track to actually beat the projections. Because as we can see, schools are open again. Prime Minister's like, hey, curfews are going to be ending soon, quote unquote. Curfew is now 11 o'clock. There's more traffic on the road, so people are burning more gas. So,
but David, you know what that's making me think about as well. Another company that I've mentioned here,
Jamaica Highway
that
Limited.
we're reviewing on Wednesday. That's so we'll see.
CJ already said that in December 2021, it was their highest ever traffic period during that time. And that's and they didn't any new parts of the highway. That's just Portmore and the east-west distance, So
Yeah, I'm looking forward to a good year from Trans Jamaica. So,
and the thing is, they pay a pretty good dividend yield
exactly.
while maintaining their obligations to pay their bond. So, as the company said, by March 1, they'll be opening their refill water location and their Express Mart store at their beach location. They have the agreement with Mr. Breakfast start having that, quote unquote, again, fast food or quick moving goods location at the at the FESCO Beach location and other FESCO dealerships that attract more customers and excursion inside in terms of the water refilling and so on, and space for persons to eat. So, QSR, quick service restaurant, that's the term I was looking for.
Yeah, that's what I remember as well.
And so, looking into the LPG, liquefied petroleum. Is it liquefied petroleum or liquefied petrol? LNG, liquefied natural gas, or it is LPG, liquefied petroleum gas. So I wasn't wrong. So we're going to skip down to, and for those who have been tracking, the top 10 has been increasing their stake over time. So hope you guys are taking note of that as well.
Yeah. Which
Along with the
is
directors.
very interesting, right? So I want to contrast that, David. We saw where JMMB formally announced a share buyback. The directors of the company for FESCO have been buying, right? So they had the IPO and the directors keep buying. So what that tells me, is that top 10, they're pretty much bullish on their own company. So fewer and fewer shares are going to be on the market over time. So that's interesting to see. So I keep watching those trading in shares news on Jam StockX. So I love to see it. So.
And FESCO actually updated their dividend policy to be semi-annual, not just annual. So that's another thing to consider as well. And they also said that that other companies are contacting them, or dealers are contacting them to open new gas stations. So along with other deals they have in the pipeline. So that's pretty good. As you can see, although FESCO had a decrease in cash operating activities, which is really because of the increase in receivables, the cash went up because of the IPO in April 2021, which had been in their Q1, and the loans they got in the period. That is why cash actually went up during the period. And they all in the expenses right here. And you can realize the biggest increase in expenses was from staff and maintenance costs and other expenses, which are more likely to be attributed to the new Beachwood location. And FESCO's financials. So let's go back to the balance sheet and highlight some interesting things. So if you noticed, the audited was $206 million for property, plant, and equipment. That's basically doubled. A person is asking why. Because they'd have actually opened the location at Beachwood. You can understand why they actually have that increase in property, plant, and equipment. FESCO receivables went up significantly, which isn't a bad thing because it means that you have more business. The related parties balance went up, which meant that some of the related parties could be the different dealers FESCO operates with, and it's a cash go up as well. So the balance sheet has basically assets almost tripled since listing. $52 million before listed, $1.72 billion as of the end of December. And the thing is, if FESCO collects heavily on this receivables balance within the next quarter, cash balance goes up. And the thing is, we're seeing the traffic at Beachwood Avenue right now. So got to speak to all those FESCO shareholders, and as you can see, between earnings is up and everything else. But the sales balance is pretty substantial, so don't get too up as yet. So let's just look at the other list of companies I said I was going to cover. I can't recall all of them right now. It's 7:25, so we're making good time. 3 companies so far. So I also said I would cover General Accident. I'm not in triple battery as yet. So I want to keep it consistency. And for those wondering, General Accident, along with other Muslim companies, they report unaudited Q4s, then audited. So what that means is that in their case, that's why we're seeing the earnings right now. And before I go on, as you can see, FESCO's price is going up close to the reporting time, released February 8 or 9, and pretty high. came back down as the prospectus for JFE came out and trending
Yep.
back up.
David, do the 1 month, yeah. So because I want persons to see. So I actually raised this. It's so interesting. I raised this on the stock review that I did a couple of Fridays ago, where I said to persons, there's often an opportunity. So we saw where persons were trying to get some cash to purchase JFB, which I'm probably sure that some of them not so happy with that decision, depending on some of the reports that they've been seeing. But there was an opportunity because FESCO, look at got till I think the day when it went down to 416, it went as low as 383. If I'm not
Yeah,
mistaken,
it was
I want
actually
to
on last week Thursday, 383, and there was a lot of units
yeah,
trading at the time.
yeah.
And
So I mean, imagine,
the prospectus came out on a Monday,
yeah.
so and it decided to trend down.
Mm-hmm.
But the thing is, for persons who are collecting units, they're pretty happy now because it's going
And
back up.
the thing is, when price starts to go down, the mindset is let me sell before it goes any lower. So some persons may say, well, it feels like you're losing money, right? Because it was at $5, maybe you bought at 450, then you're like, it's at 430, it's at 420, let me sell. And then you rush to sell, only 2 days later it's back up to 460, and then maybe that person would have lost money, so
No, and that's just it. That's just really it, in the sense that, and this is what I actually told persons. So when Trans Jamaican Highways prospectus came out, I sold everything, and no, I can show you. I'm not joking.
yeah,
And
man, don't show us on this video. We'll cover that on
but
another session.
let me explain why I did that. So I'm an old dog at the moment. 5 years investing so far. Got started in August 2016, and I remember distinctly when we seen because IPO had came out in December 2017. I saw the market just go in less than a week. We think we're looking to raise $6 billion. I think we got about $18.9 billion in subscriptions in just 1 week.
Yeah.
Even though TGH got a lot more over, I call it a month plus, we think it's the record of the fastest money to ever be raised, along with the highest amount ever in such a short span of time. Because 18 billion Jamaican dollars isn't play money. And
Yeah.
even last week when I said prices going for some stocks, I was like, all right, time to buy some stocks as well. So when somebody is particularly quote unquote attractive IPOs come out, it brings an opportunity for you to actually capitalize on some the decrease in stock prices,
I've said that so many times here.
especially when you are looking at the upcoming companies' earnings, because FESCO's report was very near. It wasn't like it was a hidden secret. Persons are taking profit, and some persons that are bought back in down here. And you give an example earlier in the group, in the sense that you could have sold at you can have sold 10,000 units at $5, box somewhere like around $4.11 around that range, and have 11,000 units. And that's a buyback strategy in the sense that if you understand that stock is going down, and you can actually set up a quote unquote peak and put in a buy order at what you call potentially a halt price, what you think is the potential floor.
Or
When
I'd
the
say
stock
a
price,
little bit above the hall price, because I
I
mean,
know,
yeah.
but when the stock price goes back up, you have more units which you didn't have before, and you didn't put in new cash. So
Yeah.
that's not what they say trading. Like, being a trader, you're gonna be like every day I'm going to try and flip a stock or buy and sell a stock. No, but it's reality that there are opportunities where persons want to exit the stock for a variety of reasons, but when the IPO comes out, it's very attractive to some persons. They're going
There
to be
you go.
selling to get cash to buy another offer.
And,
So
and the truth is, some persons are willing to take a loss temporarily to potentially grow that money more. So, for example, if someone bought FESCO at 450 and they made 10% at $5, they're like, well, if this next IPO is going to double, I can just leave this and make some money over there. But again, which is why we always say here, do not chase, because for those who would have jumped ship, they're now a little bit nervous because with all of these reports that we see coming out now. The future is not known, so I mean, we don't know how it will perform. But as I said, a lot of persons are maybe a little bit nervous now because of what they've been seeing.
And the
So
thing is, to see so many different, the thing is, I've been here long enough. I've written reports on companies, IPOs, APOs, and everything in terms of what brokers are saying. And this is the first time I've ever seen so much consensus about from a selling agent or the
no, but here's the
lead
thing.
arranger broker
I'm
staying
waiting.
underweight or do not participate. Because
I'm
I remember when
waiting. Yeah.
Kilby had its IPO back in September 2019, and Jamie was on the company that said, "Hey, don't participate." And most brokers are on the line of participating in Kilby's IPO.
Yeah, I
Kilby
remember
still see
that.
my IPO price as yet. So Jamie, you're actually right in that case, but that you don't usually see kind of division or unity in one direction of a stock when it's going to list or as APO or anything else, and it's something that's something very good or something very bad. As I
Yeah.
said, I saw all of the brokers saying buy QWI. Some brokers said no, they were the right party in this case. I saw brokers saying, for example, even for FESCO improvements, IPO, APO, I'm written on these different things. The brokers have been saying, hey, buy and invest per tree. I said the same. I put the articles on it at the same time. So to be seeing this much consistency among brokers, different
No, but here's
independent
the thing.
brokers saying,
I'm
don't
interested to
participate.
see. I'm interested to see the analysis from the lead broker. That's the one I want to see.
Well, I saw something. I was at a briefing last week Thursday, and they gave a quote unquote justification as to why fiberglass is a buy relative to the junior market index or the manufacturing distribution index. They give an example of what the company's normalized earnings would have looked like without
Okay.
the quote unquote COVID shutdowns. But boy, normalized earnings usually means they are stripping out certain events in a company's financials that overstate something. You want to have a proper comparative value, but to say it's what look like if it's normalized without COVID, boy, that doesn't strike me pretty well, because no, but I mean, sure, no respect to GK, but the thing is, when I spoke about premium normalized earnings a while ago, and I spoke
Hmm.
about shipping out that asset financial services sale in March 2020. That's when you're talking about normalized earnings, you understand? Shipping on particular events that should have, in quote unquote, increased the performance in one particular period. Even
Yeah.
separate said that, hey, when net profit was done by, when net profit actually up by about $200 million, when you to take out the sale that they did in the prior financial year, that's normalized earnings. You understand? You're shipping up particular events that overstate one period. That's what I get. But for you to say normalized earnings, if there was no COVID shutdowns and anything, like, boy, that is a line I'm not willing to step across.
Yeah. So let's see. Let's see. Let's see. All right. Who's next? Who's next?
General accident.
Okay. Devon asking if we're gonna be looking at key. I think we have what, two more companies left after
Yeah, well,
general.
we can look at Key. We can look at Key, man. Don't worry. There's
Okay.
time.
All right.
So as you can see, for the overall financial year, General Accident consolidated net profit was, almost 60%, 70% higher than the prior year. Earnings per share is up as well. The company's quote unquote shareholders' equity is up as well. And the annual return on equity is 11.6%, which is pretty good. Double digits return on equity in any period is very nice. And right here, for context, the Jamaican subsidiary did $12.97 billion in gross premiums in 2021, which is their highest ever consolidated growth in premiums to date. So the fact that the Jamaican segment, which is the parent company, the core company, is continuing to grow its books, especially on the premium side, and with profits as well. Tell me that General Accident isn't a company you should be joking about or looking at the other side. You know what I'm saying? And that is why really and truly General Accident is a company, especially from the Jamaican side, it's pretty interesting. I remember when I had to invest back in 2016, 2017, and I was looking for dividends because I got my first dividend check. I was like, let me look for a company with a good dividend payment, even if it's annualized relative to its price. And upon general accident, and at the time I was selling for like $1.40. It's around $5 right now, but that's to show you that back in those times, even back in 2016, there's some significantly undervalued companies which have increased in value now, but to show you that even when you hold over time, it still works out. So let me zoom in a little bit more so you can see certain things. So if you realize keenly, the company didn't speak about the performance from a profit standpoint of the Trinidad and Barbadian subsidiaries, because they're still giving losses to the overall consolidated financials. Yeah, premiums have increased significantly, almost doubled, but as I said, when the company speaks straight about everything, just to keep it separate and alluded. So they said investment income was slightly down, but let us just look at the notes right here. They said they paid a nice dividend in December, continue to build a digital platform, compliance to all regulatory requirements. But let us look down here on the income statement, and this is why
Yeah,
I said that.
zoom in
And
on
this is why
that,
I
Miss
said that
Manny.
this is why I said keenly that when I saw the management not to include certain elements of the subsidiaries
Yeah.
in Trinidad and Barbados, I know significant losses, because as you can see right here, the consolidated before taxation is 442.902 million, which means that with the $600 million earned by the Jamaican subsidiary, the Trinidadian and Barbadian subsidiaries contributed about $158 million in losses before taxation, even when you account for, consolidation removals. But as I said, the Barbadian and Trinidadian subsidiaries are still bringing up some significant losses to the general accident group at the moment. And as you can see, when you go up, most of these earnings right here, which have been $20.97 billion, would have been from the core company. And you see reinsurance increase. And for those wondering what reinsurance is, it is basically the company ceding some of the risk to a reinsurance company, so that if a claim is paid out, general accident is exposed to all of the risk. This is a typical thing done with general insurance companies. And for those wondering, a general insurance company is like your key insurance, your general accident, your canopy, and so forth, XWI, and so forth. Your Guardian Life and your Surgical Life are what you call your life insurance companies. So just to give me that context out there. So as you can see, commission expense went down, but commission income went up. Sorry, commission expense went up slightly, and commission income. Give me a second, Jermaine.
All right, no problem. All right, so while we wait for David, let me actually just bring up. Let me bring up. See if I can bring up something to do in the meantime. All right, so Evan is asking for key. Rick is asking for CPJ with Alex David. I think we're gonna go for maybe another 45 minutes. So let us see what I can bring up in the meantime. I'm sorry if I seem distracted. These guys in the Telegram group is just like, yeah, I'm not even going to say anything. All right, let's see. Are there any questions that I can answer in the meantime as well that might help anyone? Just let me know. Okay. I got your message. Let me bring up. So David asked me to continue with Jenna, but I want to actually just take some questions in the meantime, and then if we have some time, I'll look at some other things in the meantime. So Amar is saying, you're new to investing. Where do you get information about companies other from JSE, Gleaner? Well, I mean, really, Omar, those are the places that you want to start. JSE has a lot of information about companies. So you want to look at the company's website. You want to look at Gleaner, Observer, any news source for the company. You want to follow them on social media if you're interested. And so those are things, those are sources that you wanted to start with. I mean, I make all of my investment decisions based on what I see on those sources that I just mentioned. So just bear that in mind. Scott is asking how you can set up a JTrader account without being in Jamaica. If your broker is NCB Cap Market, then you can have your JTrader Pro account set up. We did a video on that. Let me link that for you. So to show you how to use JTrader, that's right there. All right, any other questions that I can take in the meantime? All right. All right. Kimani is asking if long-term investors, let me actually put it on the screen so it's easier. Do long-term investors really look at Q1, Q4? I mean, why not? You want to see if there are, so there are a couple of ways you can use that, right? You could say, if you're a long-term investor, remember, you're not just buying once and that's it. You're buying each quarter, maybe each month, maybe, you know, as you get lump sums, you're putting that down, but you still want to keep track of the company. You're not necessarily doing it daily, but you still want to know how the company is performing because your hard-earned money is in the company. So I still look at the financial reports for the companies that I'm holding, because long-term doesn't mean that you just buy it and you know, close your eyes. So there's definitely a reason to keep looking at those reports. All right. All right, any other questions? I wanted to look at, I think you guys know which company I'm going to bring up here, right? One of the companies we've been tracking over the last couple of days. So let me share my screen. All right, so I wanted to just have a look at Massey, how it's been performing since cross listing. So right now it has been trading between about 2,100 and about 1990. All right, hold on. Let me see these questions. Let me bring it on screen. All right, let me stop sharing and focus on the questions. All right, do you think after getting a refund, like you could have bought? Well, Javon, don't think like that, meaning you want to make the best decision you can with the money you have. Looking back at the past and say I should have or I could have, that's not going to help you. What you want to do is understand why the company did well and how to spot other companies that can do equally well, or determine whether or not that company has more to go. Right, because when FESCO went as high as I said, about 340 last year, everybody thought, you know, 400% from IPO, it's not going to go any further. and you know, there you go. So I don't think about things that way. I assess the company for where it is right now, where the current price is, where the fundamentals are, what the sentiment is saying, and then I make a decision based on that. All right. All right. I'll check out TJH soon, but we're gonna do a stock review this Wednesday, Horace. So tune into that. We're gonna go in depth on it then. Maurice saying he's seeing negative comments about a certain IPO. Has there been cases where a company has sluggish start but surprises everyone? Yeah, I mean, so I want you to understand that, and this is, I made a tweet about this today. So you have to assess the feedback of an IPO based on the offer as it stands. Now, if it was the same offer at a lower price, it might have been a more attractive offer to some of the persons who have given feedback on it. So just bear that in mind. It's not the company that is being seen in a negative light. It's more the price. So if it was a lower price, it would be more attractive, right? So just bear that in mind. You know, personally, I think it's a good company. I think there are a lot of prospects. Am I personally going to participate? I no comment. So that's what I'd say there. Patricia, Wigton, how are we gonna talk about Wigton? No, I don't think we're gonna speak about Wigton right now. David, I see you're back. You ready to go? All right, let me bring back on David. All right, let me know if there are any other questions, but hopefully that helped you, Maurice. All right.
But yeah, to be honest, I cannot recall in recent times of an IPO that underperformed and got that kind of subscription after became hot after. And
maybe not right away. Maybe not right away.
no,
Because
like I
yeah.
remember a lot. I remember a lot in 2017, 2018. So I remember a good number of IPOs and eFresh come out at $2.50. It's came on to earth and it's been quote unquote trading stock. You've had G West, what came out at some dollar something by JMMB in a trading stock after.
Yeah.
So you have companies that have got the funds and everything, but still
Yeah.
underperformed.
So what I want persons to get here though, it doesn't mean that the company won't ever do well. And as I said, we don't know how it will perform. It depends on what the market deems is its fair value. Now, the recommendation of the brokers are important, as in if I do my business with a certain broker and they put out a recommendation and I trust them, I'm likely to follow their recommendation. That is why recommendations are important. But we have seen brokers recommend stocks as a sell and they do well. So just bear that in mind as well. But you do want to watch what the collective are saying as maybe a sign of things to come. But it doesn't mean you're ready to go.
And I should happened a while ago, but I was sharing my screen again.
It's showing a blank white screen and it's loading.
Give it a second to load. Yeah, it's loading still.
Yeah, here we go.
So I can't zoom in anymore, to be honest. But this is, let me see. Yeah, I can try to zoom in as much as I can. But these are the different IPOs on the junior market since listing to know. As I said, like I can remember price history for these different companies. So and as you go in, you realize you're seeing only positives. And then US, they're trading stock, $2.50. Everything here, $2.50 as well. I create hasn't taken off, quote unquote, as it for some persons are believing. The one that could have, quote unquote, been seen as the underperforming initially was Caribbean Insurance Brokers when COVID had just hit and the prices recovered, but the company was successful in their IPO. So there was any real sentiment around the company because everybody's focused on Trans Jamaica. So, as I said, you said all the junior market IPOs. I created a provision for JFP because they should be listed. They really don't need $40 million.
I
And
need,
let me explain why I
I
said
need
that.
that list. I need that list, David. Send that list to me because I've wanted
It's,
to do a video
it's in the
on.
same drive. It's in the same drive
Okay,
updated.
thank you, thank you, thank
So
you.
let me explain something quickly. Persons are saying, will JFP IPO successful? So for context, Jamaica Fiberglass JFP Limited, which is Jamaica Fiberglass Products, which is the former name, they only need $100 million to actually list on the JSE. Why? So the persons who are going to the prospectus in detail or any prospectus, it tells the minimum amount that's required for the offer to be successful. That's always listed in the prospectus, right?
Yeah,
So in case of JFP, it's $100 million. And in case of that event, it was split 50-50. $50 million going to JFP, 50 million going to the selling shareholders. So hope that guys gives some context, to be honest, as to what we were speaking about.
yeah. I mean, for the immediate term, we're talking about this in the WhatsApp group today. That I mean, if the company is able to raise the money it's looking for, it's a win for them. So even if it's not oversubscribed and they raise the money they want to raise, in the short term, the sentiment may not be great, but they're able to get the money, do what they need to do. Maybe you have a few reports where there's more of what persons are expecting, and who knows, long term they may do really well. So it, as I said, the future is not known. So I want persons to not think negative sentiment means bad company, right? The sentiment does not impact the business operating every day, doing well, making money, things like that. So as I said, the offer has to be taken in the context for which it was positioned. So if you notice that the brokers who would have released their reviews, they 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 would put what they have considered a fair price for that IPO. If the IPO was being offered at that price, they maybe would have changed their recommendation from do not participate to buy. You understand? So you have to take that into context as well. All right. Right.
Yeah.
Continue, David. Yeah.
So I just came back on the general accident. So the full year was positive just because of the Jamaican segment, but the subsidies are probably going to drag on to the company's earnings for some more time in the future. As you can see, they did less in quote unquote premiums for the period, and there's a significant increase in claims for the overall group of companies. So from 409 million to 535 million. I know they have regular management expenses going up by a similar amount. And even though the company, would have had investment income, artifacts and everything else, including taxation, the company reported a net loss for attributed shareholders in the period. So that's for context for persons who are looking on. As you can see, the balance sheet is continuing to expand, and the cash balance is basically doubled. Liabilities increased by much, and you have the property, the shareholders' equity attributed to shareholders increasing as well. So, and you can see the change in equity right here. And then we go down here, we see, yeah, cash rented by a large quantity, and that was because of, yeah, the company cutting some of its investments during the year. So they collected $1.47 billion in investment income, or investment in cash, and invested $150 million since they had the actual decline in operating profit. So that's why you'd have seen the increase in cash. And for those wondering who are the major interest in general accident, as you can see, L.E.A.R.N is number 3, just behind MJE. But most of Jamaica owns the controlling interest. And it's surgical select funds and Apex Pharmacy is related to Mayberry, but I guess at least gives you some context as to General Accident's most recent performance. And we can see the market reacted quite negatively to the report.
Yeah.
Because I remember when person saw the quarterly report comes in November, like around here, spike up.
Mhm.
And when the final report came out for Q4 now, and the thing is, it wasn't a surprise to me because everything at least before earnings season came out about which companies should go up or down or surprise
Yeah.
anybody.
Yeah.
And the general accident was at the same time I said it was probably a trading stock in terms of the trading range
Okay.
and so on. But when it came on to even Mailpack is went below at $3 today.
Yeah, man, it went to 298. I'll reserve my thoughts on that one. But mail pack, yeah, definitely. I anticipated that coming. It is one of the stocks that I'm looking at, and I actually see that as a trading opportunity in the short term, and I'm hopeful for the company long term.
All right. So for Key, Mr. Key has demonstrated some significant improvements. So for Q4, it's $280 million in net profit before tax, relative to 88.5 million. And as you go through the numbers, you realize that everything is going up after GK did their magic. And for those wondering, GK owns 72% of Key. And let me show how that comes about. Where persons ask, wait, doesn't GK own 65%? I hear this all the time. So when GK did the rights issue back in January,
Oh, that's so
uh,
hard to see.
oh, GK Capital Limited, GK Capital Management also took an
Mhm.
8% stake, while
Ah,
Grace
okay.
Financial maintained their 65% stake. So that's why it came up to 73% now. They increased their stake, but if you go, I understand what I'm saying though.
Yeah.
So when you go to Key, you can see for the fourth quarter, premiums were up. The interest went up as well, but as you skip down, you realize that the commission and reinsurance yield was much less. Claims expense came down a little bit, which isn't bad. And they had under the underwriting profit. And I'm trying to remember the reason why they had an underwriting profit, but it doesn't matter. Ah, changing unexpired risk reserves. That was a major driver for the period because as expenses went down and with the higher investment income, even if they account for higher taxes because they no longer have the general market tax rate provision on them, they said that's pretty good net profit, and 39.7 million compared to $58.7 million. And for the financial years, a profit relative to the loss they incurred, largely because of the amortization of the underwriting assets. So Key is seeing some significant recovery in the business and growth. As you can see for the overall financial year, premiums growth was pretty substantial.
Yeah,
This
that's
number matters.
that's what about 30%.
Yeah, that's pretty. Well, around 40% to be honest, but to be honest, it's pretty good considering where they're coming from. In the sense of the company almost, it was never in regulatory compliance, trying to find a way to sell the
Yeah, I
company.
remember. I remember. I remember. Yeah.
And to see the company come back around in this way, to having growing more in premiums to actually grow the books says a lot. And the claims expenses actually slowed down relative to the growth in premiums written because Faki, the biggest issue they had was that they were ceding too much in reinsurance along with the higher than normal claims expenses. So claims actually be stabilizing now, which is a event you can't predict. But you can you can adjust your portfolio to make it less risky. Shows that GK knows what they're doing. And we should be thankful that they, did Key a favor. Because for those who don't know, 72% of what Key earns right here will show up on GK's profit attributable to shareholders And it's a minuscule amount to compare to over GK's profitability, but it's still more money to GK shareholders. So, and as you can see, they have $4.48 billion in assets now relative to 2.991 billion, almost 50% growth. Actually, more than 50% growth in assets. And that driven heavily by the company's rights issue back in January, along with, the company retaining some capital from reinsurers and growing their investment book. As you can see, the company's equity base has significantly transformed.
Yeah,
So
man.
from 258 million to 1.074
$1 billion.
billion dollars.
It's nice.
And liabilities have gone up, but it's really other payables and due to reinsurers. And when we go down here, you see the rights issue, the gain and revaluation being transferred to between earnings because they sold a property. And for those wondering, they sold the property to another related party. I won't say who. You can find it on the National Land Agency website. So let me zoom in into further. Companies cash flow operations will basically the investment activities decreased. You have to account for the purchase and disposal of property, plant, and equipment, investment securities and properties. And so the rights issue here basically helping to boost the cash base. And when we go down here, we say the company's motor segment is actually profitable compared to the losses that have been seen in the past. And the loss in the non-motor portfolio actually come down as well. Premiums are still slower in growth compared to motor, but that is pretty good and shows that Key has a better future ahead. So once Key can categorize the non-motor segment and having a loss, everything should be good going forward. In all honesty. And investors were well, let me show you this. Let me show you a key before I go to mail pack. I don't want to confuse persons or lose track of many lose their train of thought. So it's a key, take off because of the earnings and came back down after because they're taking profit, but small short-term trading opportunity right here.
Yeah.
And for those who actually follow the insurance companies, you realize Q4 is when most of them make their money. So for Iron Rock, for Key, for General Accident, you see Q4 being the most heavy money area period.
Yeah.
So
It's
yeah,
always good to know when companies are closing out their financial year. So
well, when they should be reporting specifically,
yes, yes,
not just the some persons made 28% in Key from 1 week to the next,
yeah,
up 7% year to date, but still, just go to show that once you have a revival by some management or company, all is better. So let's go to one more company.
are you saying that with respect to a certain company that is currently
No.
okay?
Once you have management rescuing you, or another company saying, "Hey, we see value and we're going to take you over," and they're willing to help guide you through, that's a good thing.
Okay, okay, okay.
So let's go through the Lascows, and let's go to QWI first, then Lascow, and call it a day.
Yep, yep, perfect.
Pausing. Let me see if I can find it now. Ah, there we go. Just I was looking for. Q1 report. Top 10. Dividend. Oops. It's been spelled dividend. So we can address URLs.
Oh my gosh.
Let's just skip through quickly so we can move fast. for a little bit over the time we planned for. But
Yeah.
oh, I did not know they actually publish news on their website again. Who knew? Well, look at that. It is snowing in hell. So let me just go down to the financials so you can see it. PWI represented a profitable quarter, largely driven by unrealized gains as expected. It's slightly lower than the prior period, which makes sense in the context of the company, having made a lot more gains in the 2020 period. And just go down to other notes. So let's go down right here. As we can see, people realized a good amount of gains in the first quarter in Jamaica.
Yeah.
There are a lot less realized gains in overseas market and a lot of unrealized gains in both markets. It was evenly split,
Yeah.
which is why I saw that investment activities gain in the first quarter. And most of the administrative expenses right here are to Jamaican Teas Limited. And interest expense is to their margin loan. So let's go back to the company's specific notes to highlight some interesting things. So as you can see, they highlight that, let's go back up. Not there. So they are showing right here the performance of each market, period over period. So you can see the main market, the JSC, went down in the quarter. Junior market went up. S&P was up 11%. And KWS NAV was up 4% in a sense. So just below junior market was about main market, but underperforming these two markets. And there's company highlighted right here, in this period, the risk in the US market was not a pretty time last quarter. So they cut their margin and just, holding on to some cash opportunities that come in shortly. And they had the whole about almost $4 million with the equities in the USA and the rest of it in other markets, in this case, Trinidad. So they say of 70% of the portfolio, $2.3 billion worth of stocks is Jamaican. The majority of it after it is US market. As you can see, GK is within earnings next week, their full financial year. JMMB reported their earnings. CPG have gone up much more relative to the end of the quarter. Jamaican teas has moved much since then. Jackson has come down in price. RG has come down in price. Dolphin Cove has gone up substantially in the last month. Simple Lumber. And with respect to US markets, the Alphabet, a stock split.
The US market's feeling it right now. Yeah, so that's gonna change from 90 to what, 1800?
Yes, sir. And for those who are speaking about the stock split for Alphabet, it's going to be a 20-to-1 stock split come July. So when July comes, they're going to buy a lot more shares at a lower price. But the US market has been a very rough time, especially as American was the biggest fear here in Russia and Ukraine, and on the Federal Reserve with interest rates. So, and oh God, Meta patterns really crushed KWI's portfolio, man. Jano. More than 50% lost in, call it about the last 2 weeks, and Meta, which people know as Facebook. Everything is relatively stable with Meta. It's dragged down the book, man. That's rough.
Yeah.
The company said that they're looking to have their AGM come March. Going to be virtual, waiting for the AGM announcement. But the company declared a dividend the other day. I think this is about $47 million. And they're saying because they declared as franked income instead of retained earnings. In this case, it's not being taxed. So the shareholders will get the exact amount of 0.035 cents per share paid to them. So there's no tax. So let's just look at the calendar right here. So that means if you want to own KWI record by that time to get the dividend, you will need to have bought you need to buy by March 11 the latest.
Okay.
And they say, They're looking to pay 25% of net income to shareholders, almost twice per year. And all this will mean is that Jamaican Teas Limited will get about 40%, 44%, or whatever declared as a dividend to their own books. So as you can see, local investments up big time relative to September. US book is slightly up as well. They're returning some money from the brokers and the receivables. The cut down on the margin loan in the US market. Is it just the Victoria Mutual Investments Limited margin loan? And yeah, everything else is bingo. And the company stock price still trades even below this asset value as of today. As you can see right here. When the results came out and the dividend came out as well.
That's what 15%?
Let me check 1.03 minus
That's 16. Yeah, a little bit under.
18%.
Yeah.
And the dividend was announced ahead of time and the results were expected as well. It could be like put up there NAV every week, so you can actually calculate to anything what their net profit should be. So it's a guessing game. As you can see right here, Jamaican Teas continually buys more L.E.A.R.N shares below NAV, and what they have sold as an IPO to raise capital between them and KW, 44%. So take that into consideration, guys. And they can continue to buy up to the 50% mark. And for those who don't remember the prospectus of KWI's dividends can be reinvested into companies' share capital, and you get shares. So that's actually in the prospectus. So instead of getting dividend in cash in your hand, you can use to buy back more KWI shares, but the time to actually go to the market. Hope that gives you guys some context. And the last company we're going to cover right now, because of the time constraints, is Lascow Manufacturing. So with those who are looking at the Lascows, just know that they're performing pretty well.
Zoom in a little bit. I know these are one of Rand's favorite companies. He loves manufacturing. So.
Well, he likes these kind of companies, but the thing is, Lascow's financials speak for themselves. Let me just bring the other side up right here. Hold up on the other side, all right? Let me just skip down to show you what's going on. So the company's revenue went up by a decent amount. Costs is relatively stable, which is pretty good in this kind of inflationary environment between shipping prices and commodity price increases, and they increased their gross margins during the period by 2%, which is a lot of money. The other operating income, related to a loss, and expenses were heavily under control. Like, big up to James Roll, that man knows to run a ship. After investing in lower finance costs, and even the company didn't have any tax break, they're doing their best ever year on record going forward, 10% earnings per share relative to 7 cents, 1.185 billion in net profit compared to 1.379 billion. So based on what we're seeing right here, they can easily surpass their entire financial year that results come out at the end of May/June. And they're doing pretty well to control expenses. And the thing is, if you look down here on the balance sheet, long-term investments represent their stock investments. The thing is, cash balance is a treasure chest, $2.2 billion. Short-term investments increased. Trade payables relatively up. The company's loans, long-term loan, just $8 million left.
Wow. So that's relatively none.
Exactly. Because this amount right here in terms of the current loan is basically being paid off already. So to be honest, the company, is basically in a sense debt free. Has about $2.2 billion worth of cash. It's amount in the worth of receivables we should collect. So, and the fair value reserve will actually change when out it comes out. So as the stock prices of their portfolio increases, the fair value reserve will go positive again. So as you can see right here, the operating cash flow. Jermaine, you were saying something?
No man, no man. I wasn't.
I was saying that, as you can see, $1.17 billion worth of operating cash flow related to $675 million. And the reason for this, oh yeah, brackets confuse me, but I can look at the balance sheet to confirm it. But yeah, I believe most of this would have been due to, let me see, payables went up, so that's one thing. Inventory went up, so cash went down right here. Cash went up here. This cash should have gone in my receivables. So taxation paid probably would have been it. And for those wondering what I'm doing right there a while ago, if you want to know how the cash flow operates in the balance sheet, so the audited financials relative to the most recent period, so you calculate the difference relative to the change in the current assets and liabilities. So the company had this something operating cash flow, and the thing is, as you realize right here, there was no major capital investments done in this period. They were spending on short-term investments. And you're paying the dividend to shareholders and repaying the loan. So that said, don't basically repaid. They still had a pretty substantial increase in cash. So if you want their even the shareholders, paying off their loans, not much capital investments, and they're still growing. No bank overdraft either. As you can see, their receivables balance, they still want to go heavy in exports this year. As you can see, most of the receivables is local. And that is it. But the stock price doesn't see that kind of love at the same time. No,
That's the thing. That's the thing with Lascow. Yeah.
And let's go to all. So in 2020 was really down, and it's been constantly performing every quarter, up every quarter, and up. And even though the artists was coming around June around this time, it's just been trending down.
Yeah. Yeah. That's one of those things for me where the company doesn't get talked about a lot. Strong performing company. It's just one of those things, and it's interesting because when I think about it, I'm like, they're companies that perform consistently well that nobody talks about. You don't hear about them. Price doesn't get much love, but I mean, you have to think long term for those companies, and just know that soon, others will realize the value. So take advantage of the opportunity while you can, and just understand that it won't stay that way forever.
Yeah, but it's rare to call it a day. But to be honest, because I got some value out of this discussion, I'm looking back at the comments right here.
I don't think we have any questions. Just we've answered most of them.
Not bad.
Yeah. Is there any JA stock similar to Coca-Cola?
The only company that exposure would have been with Cinco since they battle for them.
Yeah.
Broker recommendation. So it's just been shared around the place in this different WhatsApp and Telegram groups and all around the place.
Yeah. Man. Join us on Telegram. You can get all of that information you're looking for.
I'm just looking through. So.
Yeah, I think we answered most of them. If anybody asks a question that's not answered, just let me know quickly before David jumps off.
All right. And
for those who want to understand what we did here tonight, we're going to do the very same thing in our class that's coming up in 2 weeks. Join the class. We'll go through stock analysis using financial statements. So if you didn't understand anything that we did tonight, you'll be able to understand it in full during the class. All right.
All right. Glad to be here, Jermaine.
Man. Yeah, man. So we'll catch up soon.
All right.
Cool. All right, guys. I really hope you enjoyed this review. I'll spend another, couple of minutes taking any questions that you may have, just in case. Yes, Leon, the reviews on JFP have been quite interesting. But as I said before, that doesn't necessarily mean the company won't perform well. It's a recommendation. So do your own research, make your own decision. And that's the best way to have peace as an investor, that you've made your own decision. So just bear that in mind. All right, I think we've gone through everything. So guys, if you want to see more videos like this, check out our stock analysis and review playlist. We've done over 30 stock reviews so far. Check out all of them. We're going to do another stock review this Wednesday. That's Trans-Jamaican Highway, a company that I think is going to have an interesting year. Check that out on Wednesday. On Friday, I believe I'm going to have the weekly stock market update. So check that out. That's going to be a brief video, maybe about 15 minutes, just about the highlights for the week. We'll definitely be talking about JFP on that video. Sunday, we have a masterclass for you on building generational wealth with David Mullings. Check that out as well. All right, Kimani is asking, at what point do I decide, okay, yes, I'll take a look at the financials. What are some of the pre-checks? You want to understand the business. Understand the business, know how they make money, know their customers. So the process that we use before you look at the financials, the 3 C's. So that's the company, climate, competition. So the company, that's everything that you can find out about the business model, how they make money, etc. Climate is the industry. Who are their competitors? Who else is operating in the space, whether directly or indirectly. And then competition, you want to know, how they stack up against those who are operating in the same space. Well, no, I think I mixed it up. Climate is more like the environment in which they're operating, right? And then you have the competition. So hopefully that's clear. All right. And then once it passes those steps, then I'll look at the financials, right? And that's why personally I like companies that are unique in their industry, right? So FESCO, one of its kind. Spurtree, one of its kind. Let me see another company here. Give me another company, but you get the idea, right? It's not that it's an automatic win, but it means that it's gonna be so FESCO, for example, has one of the, I think it has about 4 or 5% market share in the petroleum industry in Jamaica, which means to me that there's opportunity for them to grow that market share. That's also something that I look for as well. All right. Same for me, Leon. I can read it, but don't ask me to do it. I did accounts in high school, then I did it again in university. It's just when I started investing, I understood accounting a lot better. All right, Cygnus is yes, Cygnus is unique as well. And TJH is unique. Mailpack is unique. So you look for companies like that, but understand that its uniqueness means that investors may not always know how to value it. Meaning, so like for Trans-Jamaica, because there's nothing really to compare it to, persons may not give it the attention or the love that it deserves. But we'll talk about that on Wednesday. Kimani, we did a stock review on Mailpack. Check that out. We did one on Cygnus as well. That should be a good watch. All right. So hopefully everyone, let me share the link for the class so you can sign up. I'm gonna share that link so you can register for the class. And yep, really hope you guys found value in this. Please give us a like before you go. Yes, Omar, we're having a class teaching you how to do stock analysis using financial statements. So that class is coming up on March 5th. All right. It's free. It's free. We do one free class per quarter. The only thing that we have paid is our coaching. So we do offer financial coaching. Our first cohort is going to be this April. So you can sign up for that. That is paid. All of our other forms of content are free, right? But the coaching is going to be a little bit, it's going to be like an entire program that we take you through. So that one, unfortunately, can't be free. That one has to be paid. But our classes are free. Our YouTube content is here for you to watch. We have the Telegram group where persons can help you on a daily basis. We have our blog posts that you can check out. We have a lot of tutorials on the channel that can help you to invest. All right. I'm not sure I understand the question, Leon. I think David would be the best person to ask that question. I don't keep track of those things, Leon. David is the best one to ask. Thanks, Maurice. I'm happy that you enjoyed it. All right, guys. So that's it for today. Javon, no, not that I can think of. Okay, yeah. All right, so guys, see you on Wednesday. Hopefully you enjoy the rest of your week if I don't see you until Friday. All right.